Hey, it's Lewis here and welcome back to the channel, and in today's video we're going to be analysing Meta's stock. We'll be using TIKR terminal to go through the financials, and then I'll set the numbers into the DCF and we'll go into a fair value of their stock. Let's get straight into it. So who are Meta? So Meta Platforms Inc., doing business as Meta, formerly known as Facebook, is an American multinational technology conglomerate based in California. So the company itself owns Facebook, Instagram and WhatsApp, amongst a few other different bits of services as well. So yeah, this company used to be called Facebook, now called Meta because of their they've been advancing into the metaverse. So it's one of the big five American technology companies alongside Alphabet, Amazon, Apple and Microsoft. And the main three services are the Facebook website/app, Instagram app and WhatsApp as well. We've also got Messenger, which is a bolt-on to Facebook, and they've also got Oculus, Giphy and all sorts of little bits and bobs as well. But the streaming platforms are their main business. Yeah, it was in 2021 we changed the name to Meta, and it says here to reflect its focus on building the metaverse. The company itself is listed on the Nasdaq, and it's a component of the Nasdaq 100 and the S&P 500 index. Now let's have a look at the sales for Facebook, Meta. I'll use them interchangeably throughout this video, so be warned. Sales per business for 2021, family of apps made up 98%, then Reality Labs made up 22%. Simple as that. 98% of their money comes from advertising via their platforms. Sales per region, so 41% comes from the United States, 25% from Europe, 23% from Asia Pacific, and Canada 3%, and rest of the world 9%. Now let's have a look at the financials for Meta, and we'll start with the income statement. So revenue over the past 5 years has increased rapidly. Very high growing business for the past decade as Facebook has been. You can see the change year on year. It's slowing now a bit, which is quite predictable. Facebook's only going to grow to a certain size, but the growth has been absolutely fantastic. You can see here the year-on-year growth, really good. High gross margins for this business, gross profit growing as well. Legal setup, just something to note here, Cambridge Analytica scandal, if you remember that. That's what that relates to, I believe. Net income, yeah, look at that. It's quite good, isn't it? Lots of profit going on in this business. So net income margins as well. Net margins are fantastic. Share count has gone down ever so slightly over the past 5 years. Looks like they are starting to buy back shares. We will see why I want them to do this a lot more aggressively over the next few years if the valuation stays. If you are enjoying today's video, then why don't you book in a one-to-one coaching session with myself? In these sessions, you will learn how to analyse a company using fundamental analysis. As well as this, you will learn how to value a company using a DCF model. Value investing is the art of buying stocks which trade at a significant discount to intrinsic value. Value investors like myself achieve this by looking for companies on cheap valuation metrics, typically lower multiples of their profits, assets, and cash flow as well, for reasons which are not justified over the long term. Billionaire value investors such as Warren Buffett, Charlie Munger, and Joel Greenblatt have all used these timeless concepts to beat the market over the long term. No financial advice will be given on these calls, financial statement analysis and business valuation, education only. I will see you then. Now let's have a look at the genuine impact stats for Meta platforms, and we'll start with the quality metric to start with. And yes, it's ranking very high here, so it's looking very good. The shield around it, so it means it's one of the highest quality stocks on the platform. Profitability very high, financial strength very strong, capital allocation poor. I think capital allocation is poor because we don't do a lot of it because we're growing the business. So you can maybe accept that because it is probably poor capital allocation, but because we're growing the business, we're not allocating capital to the shareholders. Makes sense. Value wise, it's apparently looking expensive. Income statement expensive, balance sheet expensive, cash flow medium. Historical growth all very high, that's understandable, so it's looking good on the growth aspect. Into the future, it won't be growing as much, I'm sure, but yeah, I'm sure there's a little bit of growth left in the tank for Facebook, Meta, sorry. But yeah, interesting insights there from Genuine Impact. Now let's have a look at the analysis checklist for Meta, and let's go. So market cap is currently 444 billion, so a massive company. Current price of $165. P ratio of 13, earnings yield of 8%. So let's start with my first pillar. So I want a company to be profitable, high returns on capital using low leverage. These three things combined, in my opinion, show signs of a high quality business. Return on capital, 28%. Awesome stuff. You can't knock them for that. That is really, really good. Margins as well, extremely high, like we discussed beforehand, way above the 10% and 40% of gross margins, of course. Liquidity and debt, there's no issue here. So they've got current ratio of 3 if you round it up. So they've got 3 times as many current assets than current liabilities. So the short-term obligations are more than covered. Could probably be all paid off with its cash. Well, we saw that all its debt could be paid off with cash. CCC is below 60. Generally, you find online service-based businesses do have a lower cash conversion cycle. Basically means they get cash. How do they get cash in and out of their business? They get it in very quick. In and out very quick. They don't have any stock today, so that's a good reason. Total debt to capital, 10%. Not much debt in the business. So proven ability to grow, all the green. No surprise there. Ticks all the boxes. Great capital allocation. So everything's red apart from decreasing share count. So decreasing the shares, but everything else is 0. No dividends. No long-term debt repayment because I don't really had much debt. So it's a bit hard. It's a bit hard to get a green if you've never paid back debt. Good acquisitions. We haven't really had any impairments or anything, so maybe a bit harsh. But yeah, I don't know why that says 100%. I think I put it 100% because I thought 0 was a bit harsh, so anyway, I put it 100%. Quality score 100, we'll take it. Buy at a fair price, so currently Facebook is looking cheap on value metrics, so currently at a PE of 13, price free cash flow of 11. For a listed company of this size, this is cheap. So DCF valuation, so for a 10% return, using my assumptions, I'm getting a share price of $233. I'll be happy to start buying Meta at, and gain will drop to fair value 42% from current levels, so from 165. So we'll have a look at the DCF now, and this is where I'm going to get bashed from people, but here we go. So Meta Platforms, free cash flow, I have estimated these myself with a 6% growth rate, not very big. Bet it's not going to grow at 50% anymore, 40-50%. It's going to start, the growth is slowing, but I don't see it becoming unprofitable. And if anything, they're going to maintain what they've got or just grow it ever so slightly. So yeah, 6% growth for the next 3 years, and then from there 2% growth. So extremely conservative assumptions here in my view. Yeah, so $233 adjusted for net cash. So what can I say? It's looking like a decent deal at the minute. So if we put 12% in, current share price, alright, it's probably about 13, isn't it? Yeah, 13. So if you wanted to buy Meta today, you'd likely get a 13% return based on my assumptions. I'll have a quick look at Meta here. Yeah, in the past year, basically since February, it's absolutely tanked, 48%, crazy. But yeah, the way I see it, this is just an opportunity for us value investors. When opportunities like this come about, you have to take advantage and you have to pounce. And that's what a lot of the big investors are doing. Someone like Seth Klarman, for example, he's taken a big position in Meta Platforms. Michael Burry, the big super investors are now pouncing. Lilu as well. Just so many different value investors are now pumping into Meta Platforms. If you look on websites such as Whale Wisdom or Datarama, you can find what these super investors are looking into, and Meta Platforms is getting a lot of attention. High quality business, great valuation. There's not much more to say than that. It's looking like a decent company at a more than fair price. So there we have it. That was my full stock analysis for Meta. If you enjoyed today's video, then please subscribe to the channel. Thank you very much for watching. I will see you next time.
Thank you for watching. As always, it would be amazing if you could like, comment and subscribe to the channel if you enjoyed this video. I will see you in the next one. However, you can check out some of these videos.